Have you ever sat in a class and asked yourself, when am I ever going to use this? Well, we hope it should be obvious, and we think you might ask yourself, when would I not use this? This class is all about managing your money. And if you manage your money wisely and efficiently, I hope you realize that's just as important as working to earn new money. Because every dollar you save through good management means the same to you as a new dollar earned through new work. So before we start this class, some questions for you here. Do you have any idea what percent of all American workers live from paycheck to paycheck? In other words, they need each paycheck at the end of every pay period just to put gas in the car and food on the table? Think about it. You'd like to have some savings, a cushion, but most Americans don't. What if you were lucky and you were wealthy enough to be, say, a professional athlete? Do you have any idea how many professional athletes are bankrupt within just 5 years of retiring from their sport? And maybe you can name some famous wealthy celebrities who have gone broke, even though they made millions in the entertainment business or whatever reason were a celebrity. The reason we want you to know this is because this could happen to you if you're not smart about your own money. So the answer to that first question, how many people live paycheck to paycheck? Recent data shows that 76% of all Americans aren't saving any money. They're spending every dollar from every paycheck, which means they have to stay healthy and keep working just to pay the bills, to feed their family, to put clothes on their back, and to put gas in their car. This is dangerous. 3 out of 4 Americans don't have any savings and they're not building up any cushion. So a financial disaster, like your car breaks down, you get in a car accident, someone gets really sick, these things could create real financial hardship for you if you don't save some money up and build up a cushion that can earn money for you through interest. The other question was about what if you were very wealthy, like an NBA player? Actually, 60% of NBA players file for bankruptcy within just 5 years of their retiring from the sport. That's scary. These guys make millions of dollars a year. So the point is that even with a lot of money, if you don't manage it wisely, you too could be headed for financial hardship. It's not just NBA, NFL players within 2 years of retirement, 78% of NFL players are bankrupt or financially stressed. This is scary. These guys make a lot of money. Some of these folks make more money in 1 year than most Americans make in their whole lifetime of working. So just because you make a lot of money doesn't mean you are immune from financial disaster. You've got to be smart with your money. Could this happen to you? Well, maybe you got a good job. Well, maybe you're good at math. Maybe you don't have to worry about it because you think your parents are paying for college. The point is that these things can happen to Americans who make a lot of money, and they can happen to ordinary Americans too. Here's some more data. You can look at celebrities. There's a Google search that shows all kinds of celebrities that went bankrupt. You got them from the hip hop industry. You got rock stars. You got country and western stars, actors, actresses, even royalty here. This is the one of the British royalty, and she is related to one of the wealthiest women who's ever lived, the Queen of England. It can happen to a lot of people. It's not just athletes, okay? So people who earn millions do end up going broke. You've got to be smart about your money. So we're trying to build good money skills in you. What if you got lucky and won the lottery? Actually, one financial institution here did a study that shows as many as 70% of Americans who experience a sudden windfall. That means like you won the lottery, maybe you had a lawsuit where you got a big check, maybe you got an inheritance from somebody who passed on and left you a bunch of money. 70% of Americans who experience financial windfall or a big check lose that money within just a few years. So our point is that you need good money skills. No matter how lucky you are, or how challenging your situation is, good money skills are going to be useful to everyone. So when are you ever going to use this? You're going to use it every 2 weeks of your working life. Hopefully you earn a paycheck and every dollar counts. So let's take a look at a sample paycheck here. Okay, here's John Doe. It's a fictional paycheck, but this gentleman right here has worked 50 hours in his 2-week pay period here, and he's earned $9 per hour. So I want you to understand a couple things. First of all, his gross pay is total money earned. It's his hourly wage, $9 an hour times 50 hours that he worked over these 2 weeks of work. All right, so 9 times 50 is 450. You can see his gross pay for this period is 450. 9 times 50 once again. This is his year to date. Looks like he's only worked for a couple pay periods because that's double the 450 number. So year to date is all of his gross earnings or his gross pay for the year so far, year to date. All right. Now, this gross pay can include overtime, Some people call it OT. If you work more than 40 hours a week, a lot of jobs will pay you time and a half. Salespeople make commissions, and if you work in the private sector, you might get some bonuses. Maybe it's around the end of the year, maybe it's around Christmas time, but a lot of companies do give bonuses. Benefits are a very important part of your compensation, like health benefits or a retirement plan. You want to think about that. These are not usually calculated or added into gross pay, but they are a significant part of any person's compensation. Not all jobs have benefits, but hopefully you're getting a job that has a career path and does give you some benefits like retirement and health care. Okay, so that's not part of this calculation up here, but you hope there's some of that for you. Okay, there's a line item here in this guy's paycheck for health insurance, but he doesn't work enough or doesn't have enough full-time employment to earn it. Okay, let's talk about his gross pay and his year-to-date. We already talked about that. Let's talk about deductions now. Okay, deductions are dollars taken out of his gross pay for taxes and Social Security. If you look at all these dollars here, the $6.08 and the $25.92, these add up to $32 exactly. These are his total deductions. So one thing you got to notice here is that 450, his gross pay, minus this 32, the sum of these four numbers here, that is what is called his net pay. So 450 minus 32 gives him his net pay of 418, and that is basically how a paycheck works. What are these deductions, you ask? Well, you got to pay federal income tax to the national government. This student here, I presume, didn't make enough money to be taxed by the federal government, and if he doesn't make enough for the federal taxes, then he probably wasn't taxed with his home state. This is Wisconsin, right? This guy lives in Milwaukee, Wisconsin, down here you can see. And so a lot of states do have state income tax. Looks like he has not made enough money yet to qualify to be taxed by the feds or the state. Okay, this Medicare tax, these things go for Social Security and for Medicare. This is something that can help you have health benefits when you're old, but you've got to understand these deductions and where they go and how your gross pay or your take-home pay is calculated. Gross pay minus deductions is your net pay. All right, that's a sample paycheck. Here's an actual current student from Roseville Joint Union High School District. He works at a local restaurant, blacked out the name, took out his personal info. This is very recent from December 2013 to the new year here. Here's his gross pay, $272.88. He makes $8 an hour and he worked 34 hours, 0.11. Okay, so this number times this number gives him his gross pay. His deductions here, if you add them up, they should subtract from that number and give him his net pay here, or his take-home pay of $230.64. And attached to this pay stub was a check for $230.64. Not bad. He's working a lot of hours. It's a 2-week pay period, looks like. So it looks like he's working about 17 hours a week. Okay. Here's another one. This current student is employed at Taco Bell. Notice he didn't have as many hours, just 16 hours. Once again, it's a 2-week pay period. I think that might be blacked out here. But over 2 weeks, he worked 16 hours at $8 an hour. So he made $128.80. That's his gross pay. Here's some deductions, right? Federal taxes right there. Medicare right there. Social Security. And this is California state disability insurance. This is what happens if someone gets injured. So you have to pay money into that fund, because if this student was injured on the job, he would be able to collect some disability. So his gross pay minus these last four numbers here gives him his take-home pay, or his net pay, of $113.42. And so there you see it on the check up here. This is the actual check that he rips off and signs and deposits at the bank. And so that's how that's calculated. All right. So this FICA, this Social Security, Medicare, these things are already determined. You don't have much say in those things. Social Security is about 6.2% of your gross pay. The asterisk just means you pay 6.2 up to a certain level. If you make over $100,000, we'll talk about caps later, but basically most people are going to pay 6.2% of your total pay. Medicare is about 1.5%, so this number is smaller on your deductions, but you have to pay these both because they will hopefully benefit you both. But there's some questions about that, right? There's more people collecting these two things than there are people paying in, so you got to be careful. Federal and state taxes. You do have some say. You get to decide how much money is taken out of your check for federal and state taxes to some degree, but you've got to be careful. If you take out too little, you may owe tax money at the end of the year. A lot of people don't save enough money, as we said earlier, so it's hard to pay that at the end of the year if you didn't have it taken out along the way with deductions on each paycheck. How are those things determined? Well, When you become a new employee, you should be getting one of these W-4 withholding allowance certificates. This determines how much money is deducted from your check, and you have to decide the number of allowances. Okay, they'll help you decide this because you have a worksheet that will help you do this. But when you get your first job, you decide how many allowances you have. They have guidelines. Okay, you have a little bit of flexibility here, but again, you've got to be careful. Take out, you have a lot of allowances, they'll take less money out of your check, but you may owe at the end of the year. Be careful. If you have fewer allowances, more money will be taken out of your check. But if too much is taken out, when you file your taxes at the end of each calendar year, you should get money back if you paid too many taxes. Okay, so doing this accurately can make your taxes less work, and doing it inaccurately can get you in trouble if you took out too little. Okay, so be aware of that. What if I didn't want any money taken out? Can I claim enough allowances where no taxes are taken out? Sure, you could, but you may have too little taxes taken out, and then you've got fines and penalties, and you could even go to jail if you don't pay your taxes when the tax bill comes due. If you think it won't happen to you, man, it happened to one of the most notorious gangsters of the 20th century. Al Capone was busted for federal income tax evasion and actually served time in Alcatraz, that prison out in San Francisco Bay. Despite all the guy's crimes, the one crime the feds got him on was tax evasion. He didn't pay his taxes, so they busted him and he ended up dying in prison. Okay, so if it happened to him, it could happen to you. Make sure you do your taxes right. Get it right your first day of work. Check with your parents or check with a financial advisor about exemptions on your W-4 form or your allowances so you don't owe taxes at the end of the year. Now here's another paycheck. This looks like Jane Harper from Anytown, USA. And this one here, she's got some deductions that are unique because she's from New York. Okay, so first of all, gross pay. She's got 32 hours at 10 bucks an hour, 320. See the math? All right, she had 1 hour of overtime. Notice that overtime is time and a half. So her $10 an hour rate is now $15 an hour. It's like a 50% raise for that 1 hour. And it looks like she also got paid 8 hours for vacation time. So she didn't have to work that day, but they gave her 80 bucks because she earned some vacation, okay, or there was a holiday. Add all these up, and here's her gross pay. Looks like she was reimbursed for tuition down here. So we got to watch out for that. That's a unique case. But here's her gross pay, and then down here are her deductions, okay? Notice a couple new ones here down here, SUI and SDI. We talked about state disability tax, okay, but this one is SUI, state unemployment insurance, okay? If somebody loses their job, a lot of times you can collect unemployment because you've paid into it, which she's done here through this small deduction. All right. Some other deductions here, you notice federal income tax. She does have taxes there. She does have Social Security, like we talked about. She does have Medicare, and New York does have a state income tax. This one here is really unique. Most cities don't have their own income tax, but New York City does. Okay, it's a lot of government programs in New York City, so she pays some city tax. In California, you'll probably pay federal income tax and California state income tax. Most places in California don't have a city tax. Okay, so add up all these deductions. She pays some union dues here. She's part of a union, so all these added up do come out of her gross pay. And there's another piece here I really want to talk about, and that is this 401k plan. All right. She has a stock plan, looks like where she invests in the company stock. She has some life insurance and a loan here, but I'm less interested in those than I am in this 401k plan. Okay, most Americans don't save for retirement. She is deducting money voluntarily from her own gross pay to put aside money for retirement in what's called a 401k plan. If you have this opportunity, this is a great financial decision to do because the 401k plan is money taken out before she's taxed. So in other words, if you take money out that goes into a retirement account, it can grow and earn interest without taxes, and she reduces her tax burden up here. And oftentimes companies will match the money she takes out here, so she gets free money from the company in many cases to where she gets to set aside for her retirement. This is very, very wise from a tax strategy perspective. It's also very wise because if you take money out and your employer matches it, you are getting free money from your employer for your retirement. Very, very important. Way too few Americans are doing this and doing it to the degree they need to plan for their retirement. Please be aware of the value of a 401k plan or other plans where you can set aside for your retirement in addition to Social Security. Okay, so be aware of that. All right. So a couple keys to your financial success. Pay attention to your paycheck. Know what you earn and where it goes. Employers do make mistakes. Sometimes they're accidental. Some employers actually have been busted for skimming hours off of people's paychecks. It's tragic. It doesn't happen very often, but it could happen to you. Keep track of your money. It's your money. Have a plan. Decide how much you need to spend and don't waste your own hard-earned money. We'll talk more about that in the next module. But lastly, pay yourself first. We hope that you don't spend all of your money every pay period. Set some money aside because as we talk about later in this course, any money you save can be invested and it can grow, and it will grow faster and it will grow bigger than you ever imagined if you manage it wisely and you start saving at a very young age. It's one of the most valuable pieces of advice we could give you. Save as much as you can early and it will grow. By the time you get to be retirement age, you may have a lot more money than you ever suspected. So as a reminder, don't let poor money skills make your life difficult like it was for these people. Put your money to work for you by managing it wisely.